In 2020, 55 of the largest, most profitable corporations in America paid $0 in federal income tax. Not a reduced rate. 0. On a combined $40 billion in profit. That number comes from the Institute on Taxation and Economic Policy, a nonpartisan tax research group that has tracked this pattern for years, and it is not a one-time glitch in the system. It is the system working exactly as it was rebuilt to work. Here is exactly how 5 companies did it, and why you likely paid more in federal income tax last year than they did combined. Start with Amazon, the cleanest example on record. In 2018, Amazon reported $11.2 billion in profit inside the United States. Its federal income tax bill on that profit was $0. Not a low rate. 0. According to ITEP's analysis, Amazon actually claimed a federal tax rebate of roughly $129 million that year, meaning the federal government effectively paid Amazon, rather than the reverse, despite Amazon operating as one of the most profitable companies on the planet. Nike is the next data point. In 2020, Nike reported about $2.9 billion in profit and paid $0 in federal income tax, according to the same ITP analysis. FedEx reported over $1.2 billion in profit in its 2020 fiscal year and, again, paid $0 federal income tax. These are not obscure shell companies. These are brands you can see from your driveway. So how does a multi-billion-dollar profit turn into a $0 tax bill, legally? 3 mechanisms do almost all the work. First, accelerated depreciation, a provision that lets companies write off the cost of equipment and buildings far faster than those assets actually wear out, front-loading tax deductions into the exact year's profits are highest. Second, stock-based executive compensation deductions, which let corporations deduct the value of stock awarded to executives as a business expense, often worth hundreds of millions of dollars a year at the largest firms. Third, research and development tax credits, originally designed to encourage innovation, now claimed broadly enough that they function as a routine profit offset for companies with large research budgets, tech and pharmaceutical firms especially. Layer the 2017 Tax Cuts and Jobs Act on top of all 3 mechanisms, and the effect compounds. That law cut the statutory corporate tax rate from 35% to 21%, the largest corporate rate cut in decades, while leaving most of these deductions and credits fully intact. Total federal corporate tax collections dropped from around $300 billion in fiscal year 2017 to roughly $135 billion in fiscal year 2018, according to Treasury Department data, a decline of nearly 40% in a single year, even as corporate profits kept climbing. Zoom out to the historical scale of this shift. In the 1950s, corporate income taxes funded close to 30% of total federal revenue, according to Office of Management and Budget historical tables. Today, that figure sits at roughly 7 to 9%. The federal government did not stop needing money. The share of the bill covered by corporations simply kept shrinking, and the difference gets made up somewhere: individual income taxes, payroll taxes, or the deficit itself. Here is the number that makes this personal. The average individual taxpayer in America pays a federal effective tax rate in the range of 13 to 14% once you include payroll taxes, according to Congressional Budget Office distributional data. That means an ordinary worker earning around $60,000 a year can pay more in absolute federal income tax than a company reporting billions in annual profit, not because the worker is wealthy, but because the worker's income comes almost entirely from wages, and wages do not have access to depreciation schedules, stock compensation deductions, or research credits. None of what these companies did was illegal. That is precisely the point, and precisely why it should concern you more, not less. This is not tax evasion. It is the tax code operating exactly as it was written and repeatedly amended to operate, provision by provision, lobbied for by the same companies that then use those provisions. Every one of these deductions exists because it was written into law, and laws get written by people who respond to whoever shows up with the resources to shape them. So what do you actually do with a fact like this? You stop treating a $0 tax bill from a multi-billion-dollar company as a scandal that will fix itself, and start treating it as a policy design choice, one that gets revisited every time Congress touches the tax code. You watch which specific provisions get extended, expanded, or closed in each new tax bill, because that is where this actually gets decided, not in press conferences. And you compare your own effective tax rate to the companies you buy from once a year, just to keep the scale of it honest. If you want more breakdowns where the data does the talking, the mechanisms behind the headlines, subscribe and hit the bell, because I run these numbers every week. And tell me in the comments, did you pay more in federal tax last year than you think Amazon did? Look up your own effective rate and compare. See you in the next one.